All right, perfect. India, welcome. Okay, so there's a quite a few experienced traders here. So that is good. Sri Lanka, welcome. That is good to have experienced traders. So I really hope that this can help you a little bit to your trading. And all right, great. So for now, we got Europe, we got Asia, we got US, we got Canada, Peru, welcome, Singapore. All right. So many cities. We haven't been that far. Singapore, I believe we haven't got any audience yet. So welcome everyone. Italy, Norway, Seattle, Paris, Bangalore, India, Peru, Singapore, Orlando, Florida. Welcome, Sri Lanka. All right, so let's get started, guys. We got the audience that we were expecting for, so let's get started now. Welcome everyone. My name is Karina Five for those who doesn't know me. So we expect at least 40 minutes to explain the three strategies that we're about to tell you about. Curacao, wow, I'm jealous about you. I'm not gonna deny that. All right, let's get started now. So you are a trader in a paradise. I lived in Hawaii for 2 years, also trading, and so I know what it is to be in an island and to trade the markets. And to me, it was difficult because I was trading the Asian market. And I was not used to trade American and sessions, so it was kind of crazy. Like the time that you work, they're so quiet, and then you move to American market was absolutely crazy. And then that's when I started trading in New York. And over there, of course, things a little bit crazy, but it's a huge change. And that's when you really learn the market, and the opening of US market with European market. So yeah, I would like to show you first, in case you're interested in different tutorials and different topics. And so here, well, this is our site, and over here, this is our channel, and we basically published every single day the daily report after we trade the markets for like about, I don't know, 2 hours, 3 hours in the morning time. Then after that, I sum up what happened and what we did during the trading session, and then I give instructions of how it's going to be the market at the closing of the Europe market. And that's when you got the daily reports. So daily reports, they are, yeah, if you subscribe, you can get the notification when it's uploaded. And it's about between, yes, it's before the closing of Europe, that's when we stop trading. So we are day traders. And I'm going about to explain you how to combine both strategies, since now the market is in the perfect situation where you can combine intraday trading, scalping, and also a long-term strategy. So I'm going to give you a few tips about it. Now, if you scroll down here, the channel, you may have also a few tutorials. Just bear in mind that it's also some tutorials in Portuguese and Spanish. But if you go, for example, here, stop loss versus hedging, you may find that useful for you. How to start CFDs if you have, maybe no idea about CFDs markets because you're coming from stocks or options or whatever. And how to do your map price. This is a good one too. That may help you a lot. And price action trading. And if you scroll down, you may find some good tutorials that you. But yeah, every day the one that is for sure that you're gonna see is the market brief, and it's just a sum up of what we've been trading during the trading session. So and then I pasted on the Telegram. We do also have a Telegram here where I tell all my traders what to do when we finish the live trading session. So for example, we were trading buying dollar yen, and then I say, okay, well, all the rest you keep the same strategies that we spoke before. And this is just a follow-up of the market when the live trading sessions are closed. And yeah, so if you like to join us either here and also for the live trading, then some of my team may contact you to send you the recording and also to invite you to live trading sessions and everything. All right, so let's get started. And my proportions and my what I suggested on this particular presentation is to tell you how you combine the intraday trading, scalping, and the long-term strategies. Because of course you want to diversify. That is the first thing. But the thing is, not every time and not the entire year you can diversify your trading. So you want to make sure that you know when to do that. That is the first step. So I would like to walk you through first a little bit of introduction, and then to take you little by little and how can you diversify your entries. Well, you can trade CFDs, I bet you can, but of course you get a lot of regulations that you may not be, it shouldn't be easy, but I'm sure that there's brokers over there you can trade CFDs. I mean, regulations, of course, against them, like many other countries, because they don't know how to regulate it, actually. But I believe you can open a trading account over there. And the thing is that the examples that I'm going to, okay, yeah, I traded CFDs over in US, so I don't know how that could change so rapidly. I don't do the NFA or the CSX already got that decision to close brokers over there. But I don't know. I got to double check if there's a new regulation. So, first the introduction that I would like to give you a little bit is when you can consider long-term strategies, and then how can you combine that with scalping and day trading. So first things first. I know that most of you can apply also this for stocks or commodities or any instrument that you would like to trade. You just need to know exactly the levels and the prices and the time of the year that you can use this strategy. So let's start with the long-term strategies. Okay, so for example, what do we understand for long-term strategies? That's the first thing you need to know. A long-term strategy, depending on the market, right? So let's go to the long-term strategy. So long-term strategy, depending on the market, but in the CFDs, we consider long-term strategy between 15 to 20 days to keep a floating transaction. In the stock market, you may consider a long-term strategy could be after they release the balance of the company numbers. So you need to know, how they're going to evolve during the semester or during the month that you're trading that stock. So you may consider long-term strategy for stocks for a month, In terms of commodities, well, depending on the commodity, but let's take, for example, gold and oil. Also, you may consider gold and oil between 20 to 25 days. Those is a long-term strategy for gold. Regarding long-term, what we consider is basically how to hold on into an entry until the market area is all covered up. So basically, if you are trading, for example, at the lows or at the highs of certain active, certain product, then you know that market area is going to be all covered up down if you are in the highs, right? And that market area is going to be all covered up from the lows. So you want to have the best buy prices and the best sell prices. That is all there is to it. And you have this strategy for, like I said, for CFDs, currencies, or gold, for oil, for stocks, for anything you like. And the main point here is to understand when the market has the highs and when the market has the lows. So that is the main issue for you. Now, the thing is, and the examples that I'm about to give to basically get this topic to the ground and to show you the examples, it is on gold and currencies. I don't have stocks available because that's not my expertise. My expertise is like I said, in currencies and also commodities. But if I see a stock, and if you name me a stock here on the panel or whatever you would like to know, I can just pick up the chart and I can tell you and see if you can go ahead and plan a long-term strategy or you don't. Like, you have to stick with the intraday strategy and not to tend to hold on into that transaction, because many times happens that you follow a suggestion, you follow an advice, or somebody told you, look, you need to buy bio stocks, so you need to buy whatever, Amazon, Microsoft, or whatever, and then And just because of a rumor or because of the news or whatever, you go ahead and buy or you go ahead and sell if you are on a derivatives market. And that's one of the mistakes. Basically, you cannot follow rumors in the market. You need to exactly know the price that you're after. If you know exactly the price that you're after, then it's much easier to plan a long-term strategy and to plan an intraday trading. So the first thing you need to know on any instrument that you're gonna be trading is exactly the map pricing, and that applies for everything you would like to trade. Now, that being said, regarding the intraday trading, yeah, of course, yeah, I think I got it on my email. Now, regarding the intraday trading, of course, the intraday traders, right? What they do is they go for the swing of the day. So they may say they're swing traders, but they need to close the trade within the 3 hours of two different markets. If they either trade with Europe or they either trade with the United States market. So a swing trade goes for those 3 hours, the overlap of the market or for the opening of Europe. A intraday trader is a misunderstanding that you have to hold on for your entry for 24 hours. That's not the way it works. If you are an intraday trader, you close the trade when the high and the volume is at the peak. That is on the 80% of the volume of the market. We all know that is between Europe and US. Now, intraday traders, they work here. They work for the swing of the day. After the market of Europe close, then there's no more volume that you can take advantage of, and the swings start dying. So if you don't take the swing of the day after Europe closes, then you're not an intraday trader. You're just opening transactions during the day because, I don't know, your technical analysis or your indicators are showing you to do so, but you're not really following the volume. You're not really following the swing of the market, and you're not thinking like a bank. That's what I tell to my traders every day. You gotta think like a bank. What is the bank doing? Is this the bank entering for long transactions? Is the bank entering for short transactions? Are they going to take the price down? Are they going to take the price up? What are they doing? So the way they think, it is exactly how you need to think your own trading. Of course, we don't move the market. We are nothing compared to the volumes of the market. But if you think like they do, you're going to be safe, and that's what's the most important thing here. So also intraday traders, they go for the swing. And also there is one variation here on the swing traders that they can, what we call, scalp the market. So they are basically scalpers, right? Now, what a scalper does is what they do, they divide the swing of the day, and they basically plan with different lines, because it's very hard to put depending orders on the swing trader on the range of the day, but they divided it on all the possible pivot levels that you may consider into a buy range or a sell range, so into a swing for buyers or a swing for sellers. Now, those scalpers, they can take the swing of the day and make, for example, between 5 to 7, maybe up to 15 entries on this same swing trading. So let's give an example. You go ahead and you buy or you sell just at once, right? If you're a swing trader. Now, if you're a scalper, you're not going to just buy and sell just to take the entire range. You go ahead and you open an in and get out of the market every time the market hits a new target or hits a new price, because the risk of a swing trader is that the market goes from A to B. Okay, this is the swing of the day that you're after, because the market, they open to buy, or they open for buyers, or they buy or whatever. Now, the market is supposed to go from A to B. Let's give an example that it could not reach the entire swing, and then the scalper, the advantage here is that the scalper is going to divide the range, the swing of the day, into, for example, 1, 2, 3, 4 parts. And this little part that the scalper is dividing the range of the day, it is because on every single entry that they divided is here supposed to have a pivot of the price. What is a pivot of the price? Basically, if you buy on that exact level, the market will try to sell. That is a pivot, so it just tends to return. Now, the advantage of a swing trader It is that, of course, you spend less on your trading because you go from A to B and you pay just at once, just one spread, one entry, and that's it, and you get out of the point B. That is the advantage of them. The disadvantage of the swing traders is that the market could never reach the target, so could never go from A to B. So that means that you're stuck with the entry, waiting for point B for your target, and the market just goes to, I don't know, get stuck in the middle, for example, and then come back to your price, to entry price. So that's the disadvantage of the swing trader. Basically, you cannot trust the swing from A to B or from A to B if you're selling, since you may have a pivot that the market right there, instead of going to your target, it just does this, just returns to your entry price. So that is the advantage and disadvantage. Advantage, you pay less. Disadvantage, you may not get to the target and you need to get out of your entry, either break even, like to your entry price, or maybe with a stop loss, whatever you trade, or maybe with a hedge in the worst case scenario. Now, if you do a scalper, the advantage of the scalper, first of all, is of course that you take every single step of the price, every single step of the market, So every time that you enter the market, you make sure that you're going from A to B, right? But in the middle, you take those profits, let's say 5 pips, 7 pips, 8 pips, 9 pips, and then you complete the range. That is what a scalper does. As long as you can pay the spread, you can scalp, I don't know, maybe 4 pips, 5 pips, or whatever. So now here, the idea is like you pay less, so you have to trade instruments that the spread of the commission is so expensive because you're going after these little ranges of the market, you see. So you divide your range, you divide the swing for like, I don't know, 4 or 5 or whatever entries you can do. And the advantage here is that you're not stuck with any of the entries. You go from point A and this is point B, right? From A to B. In the middle, you know that the market may try to do the opposite direction every time it hits a new price. So you make sure that over there you are out of the market and then you enter again. You're out of the market, you enter again. You're out of the market, you enter again. You can do this, I don't know, 3, 4, 5 times. Now, the disadvantage here is, of course, you are paying spread and commission every time you enter the market. Or maybe you're just paying the spread. But whatever you're doing, of course, it's more convenient to have to be a swing trader than a scalper. But the disadvantage of a swing trader is you can be stuck with an order and the market will not reach to your target, will not complete your final destination of your entry. So that's one of the two. Let's go now to long-term strategy. Then I'm going to go to the platform, of course, to show you a few real examples. But this is just to show you and to introduce you what do we understand for scalpers, swing traders, and long-term strategies. Because I heard many versions out there saying that if you're a swing trader, you work with 4 hours charts, or you work with, I don't know, I heard so many things. And swing traders, to our understanding, since we trade with the volume of the market and we trade with Europe and United States, you want to get out of the market as fast as you can and just catch the volume right on top of the banking system, the banking when they're actually trading. You're not going to hold on your entry for 4 hours. In 4 hours, this can just go around and just to around to different market area. So let me get you to the time frames that you have to put your charts when you trade for a swing trader. Swing traders, you use a 1 hour chart to enter the market because that's the closest you can go in order to catch the range of the price. So 1 hour is your time frame to trade. 4 hours is too long, it's too late. 1 hour is perfect for you. If you are a swing trader and you need to catch just the range of the day, then you work with 1 hour. Now, if you are a scalper, if you want to be a scalper and to scalp the swing of the day, then you go ahead and first you need to know the range. So you go for 1 hour. And after 1 hour, you go to 15 minutes or 5 minutes. I rather play with 15 minutes and rather than 5 minutes. 15 minutes to me, it's fair enough to see and the different pivot that the price may do. 5 minutes, too confusing, too much noise of the market, you don't have a clear picture. So 15 minutes is good enough. So for scalping, you go ahead and put your chart 15 minutes to set up your entries. And you put lines. You had to just put the lines where you know the market may tend to pivot and give you the other side of the market. Now let's go ahead and see the long-term strategy. What is the long-term strategy? Because I heard many versions of this as well. People saying that you put your chart in 1 day, you put your chart in 4 hours, and then there you just see the W form or whatever, or those chartism type of analysis that has nothing to do with price action. But there's many versions of the long-term strategies that you may hear or you may be doing now, and if it's not working for you, then just bear with me and see if now what I'm going to explain you how to work with long-term strategy works for you. So long-term strategy is basically you can do just a few times of a year, not always. When is the best time to work with long-term strategies? Well, first of all, after the first week of March, that is when you want to think on long-term entries. Long-term entries is the first week of March, because after the first week of March, you may have maybe 1 up to 2 weeks the price just going up or going down. That's it. Now, how do you know this, and how you can hold on into your entries to the next day, to the next day, to the next day, to the next day? Well, it's quite simple. If you have the low prices, okay, the low prices, and the market is giving you the best what? Buy price, right? The best buy prices, because you're in the low area. Now you want to know if you're exactly in the best buy prices of the area, because you want to buy from here up to here and to catch the entire market area. How do you know this? So every time the market closes, when I'm talking about the market, I'm saying because we trade United States opening and we close our trading after Europe close, right? The market of Europe. Now and I need you to really pay attention here. You have two different prices when you are a swing trader or when you trade on intraday basis. You got the price where the market opens, the market open price. You see, for example, Europe opens here, and then you have the opening price of what? Of US market, right? Could be right here. The open price is one thing. So you need to identify in your chart, whatever you trade in, indexes, I don't know, commodities, stocks, whatever, what is exactly that candlesticks, just to be more graphic, the candlestick of 1 hour of the opening of Europe and the opening of US. You need to identify that candlestick of 1 hour when that was the opening level, the opening prices. Now, once you identify the open price, you need to have another information here, which is the close price. Open price was one way, and also the close price of the market. So now, the close price of the market, it could have this different situation. You could be exactly on the same levels as the opening market. So for example, the market closes like the same price they open, here, the closing market of Europe and the close price of United States, they are on the same levels. What this is telling you, what is this situation telling you? That is the market finished with buy entries floating or with sell entries floating? So what's going on with the market? That has to be in the question mark after you trade during the day. Is it the market finished for buyers or is it the market finished for sellers? So that is the first question. Now, the answer here is that you don't know, because you are in the consolidation moment. Because, if they open and you are exactly on the same levels of the closing, then you don't know what's going on. Like, you don't know if the banks were holding up a long transaction or holding up sell transaction or short transaction. You don't know that. So this is the most difficult situation. And when that happens, you don't hold on into entries for long term. You open and you close for the swing of the day. So the opening and the closing, if they are on the same level, you cannot hold into transactions. Now, likely there's only 3 scenarios you may have considering a long-term strategy. You have one more time, the opening levels and the closing levels. Now, let's give these 2 more examples, because this is the only variations you're going to find in the market. Now, the other option that you may see and you may find in the market is right here. You got European market, it opens here, US market opens here, And then the the close prices, you got them about these two levels. So you got closing price here of Europe and closing price here of United States. What this is telling you? What are the banks doing? Think like a bank, think like a big institution. Are they holding up buy transaction or are they holding up sell transaction? What is the instinct telling you? What are they holding up? Exactly. What is this situation telling you? If Europe opened here, let's give an example. Europe opened with euro dollar or whatever, gold or whatever. It opens at I don't know, let's see, 1920. And then US opened and they also bought in the Europe and euro dollar and they took the price to 1930. All right. And then and after 3 hours, the market of European Union, they close and then you get the price up here. And then United States closes and they up here. So basically the entire market closed what? How did they close with the euro dollar? Not really. You had the opening here and you had the closing here. What is this telling you? What is this type of scenario telling you? Think like a bank. A bank opens here, Europe and US, and they close above here. What are they doing? Are they holding buy entries or are they holding sell entries? What are they doing? Do they expect the price to go up for the next day or do they expect the price to go down to the next day? Exactly. So I may say that 30% of the answers here are absolutely right. It is bullish. They hold on into buy entries and they hold for buyers. That means the next day they expect the price to keep going up. So you make sure you understand how the banking system works, and if they close above the opening price, you can hold on into your entries because that's going to keep rising the next day. So I'm not even opening a chart right now. I'm not even considering moving averages. I'm not even considering a MACD, stochastic, or anything like that. This is common sense for you. And if you apply it on your everyday single trading, on anything you do, if you trade whatever active, because this applies for everything, then you're going to know and you're going to notice and you're going to change absolutely your thinking. Exactly. So they expect the price to go up again and to keep going and raising the next day and the next day. Now, the third situation, the third scenario is right here. So European market opens here. They open at, for example, I don't know, gold at the 1300, right? Then US open and they open with, they start selling because they consider this as a high or whatever, and they took the price down to 12.95, for example. And then 3 hours pass by, and then the European market closes below the 12.95. So below the opening. And then US closes and they close below the opening price of the 12.95. Let's give an example. They close at 12.86. So what is the market expecting for the next day on this type of scenario? What do you expecting? Exactly. Yes, so they expect for the market on gold to keep going down. So nobody is holding up entries, is holding up buyers, is holding up buy entries on this scenario of gold. This is the example of gold commodity. Okay, now as you can see, one more time, I'm not looking at any chart right now. This is just common sense that if you apply it, you may see that you can hold on into your entries for long-term strategies. And that means that if you sell below the high or if you buy above the low and the market closes above or below the opening prices, you can hold those entries for the next day. Now, is that risky? Is that a risky scenario that you're going to hold on your entries if something may happen overnight and may correct all of it? Of course, it is a risk, and we all know that. But in order to that, to protect your entries, you can hedge, you can place a stop loss, you have many ways to protect your entries. But the risk is always there. Even if you consider and you're certain that the market are holding up buyers or holding up sellers. If you close down, you close up. Yeah, exactly. So if that happens, this is the type of scenario that I was explaining. That US or European market open here, US open here, and then Europe closes here, US closes here. When you have this mixed scenario that the market, they're not holding buyers, they're not holding sellers, you are into what? Into consolidation situation. You're into a transition moment of the market. So you don't have to hold on your entries. That is when you just go for the swing of the day. If they're not holding any entries for buyers or for sellers, because the closing prices are in the middle between the opening prices, you are exactly into a consolidation moment. So there's not the point, or there's no reason you're going to hold on into your entries, because you are into consolidation, and that means the market's not defined yet, you know. So let's go now to an example. This is just an introduction to abstract what I was about to explain you now. So we all know, I don't know, maybe you're not familiar with this. This is an MT4, and this is this is just a real account that I have, and I'm a day trader. But also, the moment that you may consider a long-term strategist are at this moment of the basically of the month. So let me tell you how that works and how are we planning to do this, because we may have the chance, since the market give good corrections for the last the last what happened with North Korea last night, and many things. So you may have the chance to work on long-term strategies now. And let me show you how we're going to do this. Now with my traders, we are considering this. Now they are buying dollar CAD, no? And let me show you first the long-term strategy that we work with dollar CAD, because dollar CAD we hold on like for 12 days by entries from the lows, and we were here and we knew that we were close to the lows. And these are just lines from the MT4. That's all it is. I don't put any indicator. The only thing that you're going to notice is just the pivot point below here on the chart, and that's it. And just a few lines that I consider for my strategy when I say, okay, I'm going to buy, I'm going to sell, and just with these lines I put my prices. And I tend not to do pending orders, especially take profits or stop loss. I don't use any of those. If I need to get out of an order, I get out of an order at the expiration price. But you all know that it's too risky to take profits and stop losses in this market, because it's too fast, you played against the spread, and many things may happen. So you rather work with a hedge somewhere around the price instead of the stop loss or take profit. So now, for example, we knew that the low area of dollar CAD was on these levels, on the 24.50 and 24.40. Those were the low areas, and we hold on to those entries on those low areas from here. Every time, I don't know if you can see that the market finished for the buyers. How do you know when the market opens, when the market closes? Well, the pivot point is a good instrument for you to understand that and to see that. So if you are confused, or maybe what is exactly the candlestick that I need to look at when the market opens? What is exactly the candlestick that I need to look at when the market closes? Pivot point will help you with that. So, also you can count the candlesticks down or up if you don't know when that opens. But you must know that in our time frame down here, and we are at GMT minus 3 at this moment. And for us, European market opens around 4 a.m. in the morning, and the American market opens at 9 a.m. for us. So we know exactly the candlestick we need to look at for the opening of Europe, and when we trade at Watch My Trading, we are exactly at the opening of US. And exactly when we finish trading, we are in the last candlestick that we see in our live trading. So we know exactly when the market is going to close, because we already got the information. So, and then this is what you do. Basically, let's give an example here. Now, if, as you can see in dollar CAD, you see all the lows right here, but you may apply this to any instrument. I'm just giving an example in dollar CAD because this is what we trade every day. Now you got the low area here, the 24.50, 24.40, and then we said, okay, well, we are in the low prices. This might be the best opportunity that we may have to hold on to our buy entries. But the condition for us to hold those buy entries, it is that the market today finished above the open prices. And that was a condition to have a long-term strategy, and that's what we did. So here was accomplished, here was accomplished, here was accomplished. And every time we trade, we could hold those buy entries up to the levels that we hold. It was 27.50 up to exactly here. So imagine the profit that you accumulate from here up to here. And this is not always, not always happens. And then we thought that the market was going to go after 128, but it didn't. But then we start closing those entries, those buy entries, after the first trading session that the market was not bought up. The market was just liquidating their orders. Then we say, okay, well, now is the moment to start closing those buy entries, those buy transactions that we are holding from the lows. And that's what you start doing. So what happens there? The market went down to the lows again and went down and down and down. And now what do we have now? Well, now it is the moment to consider, because we went exactly to the same low levels, the 24.50, 24.40, in this case exactly 24.40. So now we are at the moment to consider that we can hold on those buy entries, because today must get out of this session and get back in. Just if you don't have volume or whatever, you need to log off and log in again. So in this situation, then the buy prices, the market finished for buyers. So we are holding on buy entries at the moment. And what are we going to do tomorrow? Well, we are holding 50% of our entries for buyers today of dollar CAD, and we are holding 50%, the other 50%. So we close and we keep floating 50 and 50. That's what we are doing. And if tomorrow we buy again, we're going to hold on 50% of our entry, and we close 50% of it. So that way you diversify, and then you take the profit of your entry, but at the same time you leave floating entries. Because if that keeps going up to the 27.50, because that is the highs that we are after, you can be working with long-term strategy from tomorrow. Like, I don't know if you can see the type of profit that I'm talking about, but we are after here. We're going to be holding buy entries from these levels. I mean, we're buying from here. But if you start trading tomorrow, for example, dollar CAD, and if we buy, if we consider a buy entry, then we're going to go after here. Just holding up 50% of every time we buy. You hold on 50, you close 50. You hold on 50, you close 50, and so on, until the highs. Because it's quite clear, market finished today for buyers. Now, euro dollar finished today for sellers. So we may have the same situation for the sellers. Now, I recommend to my traders to hold on the sell entries only if we are below 120. And we're not below 120 yet. But today we did sold on euro dollar. We sold today. Now, my suggestion to them, it was, if you want to think in long-term strategy, we better think of it just below 120, just to make sure. Because below 120, we are going down to 119 and 1878. That is the levels that we're after. But since euro has some buy pressure still about 120, we rather hold a long-term strategies right after we are below 120. So that's pretty much how it works. Now, as you can see, it's a very simple concept that I'm transmitting to you now. And the final idea is to understand when can you think holding on transactions and when you cannot. Now it's like I said, you can think the same way of any stocks or any commodity that you want to trade, as long as you follow the index, you follow the market, that the quotations and the prices open and they close. If you follow that carefully and you notice when they finish above the open price and when they finish below the market price, you can, and of course you need to know the market price area, And for that, I recommend you this tutorial. It is called the price map, how to, it was right here, how to, price mapping, has to be somewhere around here, how to do your price, your map price into, well, this is applied to CFDs, but I mean, if you understand it, you can apply it to anything. You know, price action trading, you can understand first the pricing situation on the area, and then after that, once you know you are in the lows, you are in the highs, that's much easier for you. So that's pretty much all I can transmit you from the combination of scalping, long-term, and swing traders, because many times you have a misunderstanding what is a swing trader, what is a scalper, and what is a long-term strategy. So of course this explanation is not worth it if I cannot show you how exactly that works. So for that, let me go ahead and share with you the link for our live trading sessions, and then you can log into that link and you trade with us. The next trading session is within the next 4 hours, and we trade for Asia market, and that means we're focusing in Australia and New Zealand cross pairs. So but again, this is about how to you can manage your entries and your transactions and of course your investment carefully enough for you to see when you can hold on and to have a long-term strategy, and when you can work with a swing trader or to be a scalper. But any of those scenarios can be combined. You just need to know when you can work with the long term, when you cannot, because the opening and closing prices are not on the same situation, the same levels that you can think on that strategy. But once you understand it, it's so much easier. Like you work with intraday, you combine holding up entries, you make sure that first of all, of course, the management of your account, the entries that you're doing are safe enough for you to combine the strategies. Because long-term strategy has a risk involved. Yes, it does. But also the swing traders and also a scalper. So as long as you are managing correctly your entries and the capital of your account, you can combine perfectly the three strategy. You don't have to be just a scalper, swing traders, or long-term strategy. But the main thing for you to understand is to work with the chart for 4 hours. It's too late and too risky for you. This might mean nothing for you, the 4-hour chart. So that is the I don't trade options on binaries. I don't trade options. So, but I believe, yes, I believe if it should be applied to that also, because you have the same type of contracts. The contracts, you just have different names, but the product should be the same. So I believe you can totally apply to it. But the main thing, the first step for you is to understand the price map, to identify the lows, to identify the highs, and when you do that and the market condition gives you the chance for you to see and to hold on to your buy entries, to hold on to your sell entries or contracts, then that's all you need to know. That's it. You go after the entire market area. You don't have to be open and close to be spending on spread. I do not trade because I'm totally rejected to that type of investing. I go for what is secure, for what is sure for me. But that's my opinion. So okay, well, that was it for now, and I send you the link for our live trading session. If you like the Telegram, also can you request that to our country managers? We have country managers, most countries, and they will take care of you after and send you the recording if you like it. All right, thanks so much, and I hope to see you in our live trading sessions. That we have the next live trading session in the next 4 hours. We had the non-farm payrolls this week. Do not miss the non-farm payrolls. And here on the channel, there's also live trading sessions that you may consider useful, because I record some of our entries, and some of the non-farm payrolls might be here. You gotta just need to find it, because I record all the entries of the non-farm payrolls. Let's see if I can see at least the last one that we did. Oh, that's a little bit far away, 1 year ago. Non-farm payrolls. Well, I recorded them every month that we traded on. So let's see if I can find the last one, which I don't believe so. But they're all here. They're all non-farm payrolls. They gotta be recorded here. And just the last one, well, I'm just gonna waste time looking for it. But if you're interested to see exactly our live trading sessions, there's some of them recorded here as well. All right, my friends, thank you so much for your presence here, and I wish I could, yeah, on the Telegram is in both languages. I write it in Spanish and also in English, so you understand both, both languages. So yeah, it's English and Spanish. We started the translation on English like, I don't know, like 3 months ago. Like before that it was in Portuguese and Spanish, but now we do it in Spanish and English, so you will understand our trading, our Telegram, and everything we do. All right, my friend, thank you so much. You have a great day, great evening, or whatever time zone you are in. Yeah, as it is on the same Telegram, the same link. Absolutely. Thank you so much. You have a great evening. Bye-bye.